Let's get to what's going on in China, because the troubles there continuing from an economic perspective. Moody's cutting China's credit outlook, the firm downgrading the world's second largest economy to negative from stable, citing worries about rising debt levels, lower medium-term economic growth, and the downward spiral of its property sector. The downgrade comes amid a rocky post-COVID recovery for China. Here to discuss more is Shehzad Qazi, China Beige Book International Managing Director. Shehzad, thank you so much for being here. So this news from Moody's, maybe not a shock for people considering what we've been witnessing, but how should investors be taking it here? What are the implications of this downgrade?
Yeah, I think a lot of the reasoning behind the negative outlook, this stuff has been known for years now. Nothing new in there. It's almost 10 years too late. But the fact is, if you're an investor, how do you think about this? Number one, this will not affect China's plans to do small amounts of stimulus and to use some of the dry powder that it has to provide liquidity to local banks and others in order to help stabilize the property market. In other words, this will have no bearing whatsoever in how Beijing looks into the future as it thinks about making sure that the problem of financial plumbing doesn't metastasize further, and as I said, that you keep stability as the number one priority, in economic management.
Let's get to that QE announcement, which is not QE, to be fair, where this is more targeted stimulus that we're talking about over there, more of what they want. But in the good old days, it used to be blanket QE. There'd be a devaluation, not necessarily QE, but devaluation. All kinds of different levers would be pulled. And the Chinese people were saving in stocks, but now they tend to save in real estate. But neither is really working that well right now. So what's the master plan here?
Look, the master plan is to take it slow. The idea is we are not going to go in there and do a bailout of developers. That's out. Beijing is not interested in juicing investor returns or protecting them. That is not on the to-do list. The goal is, let's make sure that households that have paid for homes that they have not received in years now, they are made whole and they're taken care of. That also helps lift consumer sentiment down the road, so that is a positive. And to make sure that you put a floor, as I said, under the property market, because otherwise what you have is this downward spiral. And I think this may have probably surprised folks in Beijing also, which is why you're seeing more movement now towards stabilization.
Will it work, or will they be forced to do more?
Well, time will tell how big they have to go. Which is why they're also not going all out right away. This is very incremental. The support that you've seen being provided to the property sector, the paring back of regulations, which were very tough, has all been there. So there's a step-by-step formula that they seem to be applying to find where that sweet spot is. Because let's be sure, the one thing they're very afraid of doing is reinflating that bubble that they've worked really hard to let the air out of.
Is there a pain point, though? Is there a point at which they say, okay, we're going to give that blanket stimulus, maybe it's a devaluation, maybe it's huge, blanket QE. What's that pain point look like, if it exists even?
I don't think so, because they're no longer trying to hit high growth numbers, right? So the biggest assumption there is growth is going to inevitably slow, and we have to deal with that. We want to have slower, healthier, more sustainable economic growth. We don't want to have the high debt, high investment growth model anymore, which means that pain threshold is not where it used to be back in the day, but it was very important for the Communist Party to put a double-digit growth figure, or even something like a 7 or 8% on. Today, we're looking at sub 5%. I don't think there's any doubt about it.
We haven't talked as much about the role of export controls, right, and the sort of back and forth. I mean, most of what we're discussing is sort of China in isolation. But if we broaden it out and look at China and the United States and the rest of the world, do you see any kind of alleviation of those tensions that then helps China economically? It doesn't look like that's imminent at the very least.
Yeah, export controls haven't exactly worked the way they've been advertised, number one. So what you've seen is that the Commerce Department has been very happy to give away licenses to American and, of course, foreign chip manufacturers. When it comes to providing supply and supplying to China, number one. Number two, I think as the Commerce Secretary's comments over the weekend, I think it was made it clear they're stuck in a bit of a cat and mouse game, aren't they? So I don't know if China is being hit necessarily as hard as it seems like on the top line when it comes to export controls and chips specifically.
When we think about the U.S. relationship with China, it's been frosty for some time. You go back to the Trump era, that was a different ball of wax. Let's call it that. But we still see this animosity, and there are increased export controls on technology in the U.S., especially from the chip manufacturers. Where do you see that going? More broadly speaking, more or less of that?
I think a lot will come down to next year's election and who's in power after that. Right now, the focus of the administration has been for months to improve relations, to have high-level contact. Toward what end, of course, that remains a big question, but it is to, I think, lower the temperature in the relationship. But I can tell you that this status quo will not last. Next year and beyond, whether it's voices in Congress, whether it's other groups, more will probably have to be done, especially, I think, as it becomes clear their export controls are not going to be as successful as they, again, may seem currently.
Now, outside of companies doing business in China in that way, there are, of course, a lot of consumer-facing companies still doing business in China. One of the latest, which we're going to talk about more in a moment, the two of us, is Starbucks, which is talking about that they expect choppy conditions there to continue. For investors in U.S. companies that have bet heavily on China, can they expect it to continue to be a problem?
They should continue to expect that China's miracle growth story, all that is behind us. That you're looking at an economy that is going to grow slower and slower, and that you should hope that the policymakers in China, the Communist Party, is successful in transitioning the economy towards something where you have consumption as the main driver of growth, which means stronger households, et cetera, et cetera. But if that doesn't happen, if it looks like that plan is failing, well, then American investors who have bet big on China, they're going to have some very serious problems.
All right, we have to leave it there, but really appreciate you joining us here. Shehzad Qazi, China Beige Book International Managing Director. Thank you for stopping by our new studio here.